The next session will focus on insuring resilience, climate risk insurance, and the role it can play in supporting positive community transition. We have an excellent high-level panel on this topic, and I'm excited to introduce our keynote speaker for this session, who is joining us all the way from Papua New Guinea. I understand it was not an easy journey, but we're very pleased that you made it and you're with us. Minister Simon Kilepa, who is the Minister of Environment and Climate Change for Papua New Guinea. And I would like to give you the floor, sir, over here.
Thank you, moderator. Excellencies, distinguished panelists, ladies and gentlemen. Thank you for the opportunity to share Papua New Guinea's perspective on climate mobility and the role of climate risk insurance in building resilience. I bring warm greetings from the Prime Minister of Papua New Guinea, the Honorable James Marape, and the people of Papua New Guinea. The Prime Minister had intended to attend this forum personally. However, its international response matters have required his presence at home, including the government's response to the widespread premise impacts associated with recent volcanic activity affecting communities in Manus province and other parts of our maritime domain. It is therefore my privilege to represent my Prime Minister and our nation in this important discussion. For Papua New Guinea, climate mobility is no longer a future challenge. It is a present reality. Across our low-lying islands, atoll communities, coastal villages, and disaster-prone regions, climate change is affecting livelihood, food security, water resources, infrastructure, and ultimately people's decision about where and how to live. Communities in the Carteret Islands, Motlok Islands, Tasman Islands, and other vulnerable locations are already experiencing the impacts of sea level rise, coastal erosion, saltwater intrusion, changing weather patterns, and increasingly severe climate disasters. However, climate mobility should never be viewed simply as the movement from people from one place to another. It is about people, culture, identity, dignity, and their future. The best climate mobility outcome is when people have options and choices, not when they are forced to move because they have lost everything. This is where climate risk insurance is emerging as an important part of the solution. Papua New Guinea recognizes the resilience is not built only through infrastructure, adaptation projects, and disaster response. It is also built through programs such as the Pacific Insurance Climate Adaptation Programs implemented by UNCDF in partnership with the government of Papua New Guinea, financial institutions, insurers, reinsurers, and development partners. Vulnerable households now have access to parametric climate risk insurance covering earthquakes, excess rainfall, drought, and El Nino-related events. A major milestone was achieved earlier this year when Papua New Guinea recorded its first ever parametric insurance payout following a magnitude of 5.7 earthquake affecting parts of Medang and Morobe provinces. Approximately 3,200 policyholders received insurance payouts through Women's Macro Bank within just 14 days after the event. This demonstrated the power of innovative financial solutions to provide rapid support to vulnerable households when they need it the most. This success was made possible through strong public-private partnership involving UNCDF, Women's Macro Bank, MMI Insurance, and government institutions and development partners. Together, these partners have shown that climate risk insurance can strengthen resilience for women entrepreneurs, farmers, fishers, small businesses, and vulnerable communities by protecting livelihoods and enabling faster recovery from shocks. As climate impacts become more frequent and severe, insurance is becoming more than just a financial product. It is an adaptation tool, a resilient tool, and increasingly a climate mobility tool. By providing a financial safety net before disaster occurs, insurance helps households never recover more quickly, protects productive assets, reduces harmful coping strategies, and can lessen the need for disastrous migration and displacement. Papua New Guinea's experience demonstrates the climate risk insurance works best when combined with broader investment in climate adaptation, early warning system, resilient infrastructure, food and water security, ecosystem restoration, and plant relocation when necessary. Together, these measures can help communities remain safe, resilient, and productive while preserving their culture, identity, and connection to the land. As we discuss climate mobility today, we must ensure that vulnerable communities are not left to face climate risks alone. Greater access to climate finance, stronger partnership with the private sector, innovative insurance solutions, and targeted support from vulnerable populations will be critical in helping countries like Papua New Guinea build resilience and create pathways for safe, dignified, and informed climate mobility decisions. For Papua New Guinea, addressing climate mobility requires actions on multiple fronts. We continue to invest in climate adaptation, resilient infrastructure, clean drinking water, food security, ecosystem restoration, early warning system, climate risk insurance, and where necessary, plant relocation efforts that place communities at the center of the decision making. Importantly, Papua New Guinea has also taken a significant step by joining the international community by endorsing the global principle of addressing global climate mobility. However, our endorsement comes with a clear message. The success of this framework will not be measured by the number of principles we adopted, but the difference it makes in the lives of vulnerable people on the ground. We encourage that these principles be accompanied by stronger commitments to implement support, accessible climate finance, technology transfer, capacity building, and practical solutions for countries and communities facing climate mobility challenges. For Papua New Guinea, climate mobility is not only about responding to displacement after it occurs, it is about investing in resilience so that communities can remain safe, productive, and dignified in their homes as long as possible. Prevention, adaptation, resilience, and human dignity must remain at the center of the global response. As a nation of more than 800 languages, rich cultural diversity, and deep ancestral connection to the land and sea, we understand that mobility is not simply about moving people from one place to another. It is about protecting identity, heritage, livelihood, and future generations. Papua New Guinea stands ready to work with partners, development agencies, regional organizations, and the international community to ensure that climate mobility is addressed through practical, people-centered, and inclusive solutions. Together, we move beyond our discussions towards implementation. Our communities cannot wait. Thank you.
Thank you very much, Minister Kilepa, for setting the tone and really highlighting the stakes for small islands such as Papua New Guinea. We are going to look today at the question of climate risk insurance. How can the system of insurance be made resilient itself in the era of increasingly extreme, frequent climate shocks and events? and how can insurance coverage reach the most vulnerable countries and people. And we have an excellent moderator with us to lead this discussion. Ms. Coco Warner has been really a pioneer in the climate mobility space, led very early research efforts with the reinsurance industry, most recently led the Global Data Institute here for the International Organization for Migration, and she now leads an effort at the University of Pennsylvania to establish a climate observatory there. And we're really pleased, Coco, that you're joining us today to lead this session. So I pass to you.
Thank you so much, Sarah. That was so kind and generous. Excellencies, colleagues, friends, so many friends. It's wonderful to be here today. First of all, thank you to GCCM and UNOPS. Thanks especially to the Bosch Foundation, Germany, as a host of this important congregation, and to the many supporters. Our community has gathered from all over the world. Many of you are traveling at a really busy time, but also really difficult times. So I just wanted to acknowledge what it's taken for all of you to be here and the time that you have taken for this conversation. Thanks, as Sarah said, my name is Coco. Many of us have worked together for a lot of years on these types of topics. And to give you a sense, I'd like to provide just a framing for our conversation. But what you really came to listen to is a set of tremendous panelists who I will introduce. We're joined by ministers, insurance executives and experts, multilateral development banks. But just by way of framing, as all of you know, we're entering an age of overshoot. And overshoot is shorthand for rising temperatures, but not just temporarily. We know that we'll probably rise above the 1.5 degree global average temperature. And we know how to get temperatures up, but we don't know how to get them down. And we want overshoot to be temporary. But what all of this means for us, for our lives, for our communities, for those involved in helping us protect our communities, whether it's insurance, governments, banks, etc., is we really have to focus on the protection gap and how to close the gap or narrow it so that people can continue living well and safely. And of course, movement, mobility is part of that, but we always want to keep the focus on strategic partnerships, making sure that people have options and not that they don't have options and find themselves in a really desperate situation where movement may be all that they can do just to stay safe with their families. And so that's really the focus of our conversation here. We know that risk and many of our systems to manage risk were built for a different time, a time that we're leaving behind us now. Many of our institutions and tools were built for a time when a disruption comes, but then it goes, and we don't have a flood or a drought for many, many, many years, so we have time to recover. But now, every year, it gets harder. Every couple of years, there's a drought that sets farmers behind. Markets adjust their expectations. Prices go up. The bond markets are trying to figure out, we have debt, but can we repay the debt? And all of these things are changing our expectations about managing risk. The era of overshoot means that we have to think about persistent risk that's with us as we go along. And so with that, I'd love to invite our panelists to the set of chairs here. And as they come, let me just give you a sense of the cool conversation that we're about to have. I'd like to invite all of our panelists just to take your place. We're joined by Excellency Voseva Cheka, who's the Minister of Home Affairs and Police in the Kingdom of Lesotho, Mr. Günther Tallinger of Allianz, Mr. Daniel Best, who's the President of the Caribbean Development Bank, Mr. Isaac Anthony, who's the Chief Executive Officer of the Caribbean Risk Insurance Facility, SPC, and Mr. Krishnan Narasimhan, who's the lead specialist of climate disaster risk financing and insurance at UNCDF. And thank you so much. You've all managed that perfectly. Thank you, everyone. Now, just a little bit of housekeeping. Everybody has a couple of microphones in front of them. I'm going to go over and sit over there. What you're about to experience as an audience is I'll ask a question to one of our panelists, and they'll share some key thoughts. Then after that, we'll have a discussion amongst the panelists, which is often completely interesting because you have all of these interesting perspectives. And then from you as an audience, would love to hear 1, 2, maybe 3 questions before we conclude. So it's going to be really a fast session, a lot to discuss. And as we go through, really think about what it takes to keep the focus on protection. We want to make sure that if mobility is part of people's solution set for adapting to the risk that we have with climate change, that it's a choice, that it's enabled, that it's together with their communities and in partnership. So with that, introduction, Minister, thank you so much for joining. I understand that your post in the government is a new hat that you're wearing, so we really appreciate you making time. I wanted to ask you, Minister, what are you seeing in Lesotho? When it comes to risk, you're probably managing fiscal situation. People are experiencing floods, droughts, all kinds of weather extremes. What are you seeing in Lesotho, and how are you managing it?
Thank you so much. As you had said, I'm new in this whole thing, but what I'm seeing as a person first, not before, as a minister, we are a country that is very mountainous. We are also a country that has been dependent mostly on agriculture. So with this new climate change and floods and droughts and all of that, we see a lot of our people being forced to move for safety and also to look for economic other ways of living. So it is indeed a challenge, but as a country, we are committed to making sure that as much as it is a challenge that nobody foresaw, we are committed as a country to make sure that we insure. I'll give an example of last year when we were hit by drought, and because of this insurance, I think it's ARC, African, yes, because of it, we were able to make a claim and our people were protected. So it is just one of many that we are exploring at the moment. Thank you.
Thank you so much, Minister, for that experience. And I was looking at you, Isaac. I know that you're familiar with the regional risk facilities, and we're going to come to you. Thanks for that cross-reference. Gunther, you're joining us from the private insurance sector, and I similarly wanted to ask your perspective about insurability. We know that climate risks are spatially very large. If you think of heat, for example, as you're feeling, Europe is heading into a really hot, maybe a kind of heat wave early in the summer. And they're also unfolding temporally in very long scales. What does insurability look like? Can you give us a sense of what the insurance sector is thinking about managing these kinds of risks? Thanks.
Yeah, thank you indeed. If we talk about insurance, then clearly we need to talk about the carrying of risk. And there are multiple dimensions. One of them is pushing the frontier in the form of covering more risk. Another one is how do we really work to reduce certain forms of risk. And then there's clearly the cooperation part, how to really work together with governments as a private sector entity. Before I come to these points, please let me mention one thing that is, I believe, very important. As an insurer, we are also an investor. And given the panels that we had before and yesterday, I think it's very important to mention that the whole part of mitigation is something that insurers can play very, very well as investors. We have, for instance, a large group of such insurers who work together in an entity that is called Net Zero Asset Owner Alliance, where we do absolutely reduce emissions. So we really work on this problem of ever more energy in the atmosphere. So thank you for allowing me to mention this as a start. Now to the insurance part. Pushing the frontier means that insurers have to go into solutions that we have heard already today in various forms. His Excellency in his speech has mentioned parametric insurance. Clearly we have the topic of microinsurance. We have other forms of how terms and conditions can change. So insurers can work on pushing the frontier, be more targeted, and in this form cover actually more risk than today. Insurers can work together to pool risks. Absolutely. Here they can really work together with governments, and we will hear for sure how this pooling is going to work. Let me mention, however, we cannot pool ourselves out of this situation. It's not possible to have ever bigger pools. This is why I mentioned at the beginning we must work on the mitigation part. And then there is the element of real risk reduction, if I can mention this very briefly. As an insurer, of course, we can provide data. We've heard from the European Space Agency how we can work together to actually identify risks and then really figure out what locations are the right ones, what form of resilience can we bring into infrastructure and other forms of construction, but also what can we do in terms of behavior. So insurers can work to reduce risk in the situation today. So that are elements that I clearly see, and I do believe the insurance industry is willing to really work into this, at least a good number of players there.
Yeah, really appreciate those thoughts, Günther, and especially the emphasis on working with governments to reduce risk, keep insurability as long as possible, and also the point about helping our economy move towards sustainable energy systems. We have talked a little bit less about that here, but really appreciate you keeping that focus, which all of us need. Now we're really excited to hear the perspective of a development cooperation and a development bank. Can you tell us, from the perspective of the Caribbean Development Bank, we hear about de-risking. What can development banks do to help contribute to managing climate risks, especially for communities in small island development states?
Sure, thank you, Coco, and let me thank GCCM and Robert Bosch Stiftung for having the Caribbean Development Bank here. I also, of course, want to thank the government of Germany for providing this Caribbean weather that makes me feel so comfortable here. I was concerned about that traveling here. But you mentioned it in your introduction, Coco, and that is the fact that we're not having chance to recover from these natural hazards. And I'll perhaps use that as my point of departure. The Caribbean has experienced 5 Category 5 hurricanes over the last 8 years. So 5 1 in 100-year events every other year, almost. The Caribbean Development Bank, as a multilateral development bank and as the single indigenous multilateral financing institution in the Caribbean, is uniquely positioned to create layered financing products to help with this particular situation. And what do I mean by that? There is no, because of the scale of the disasters we are facing, there is no one-size-fits-all. First, let me say I align my comments with those of the previous speaker in terms of the urgent need for reducing emissions. But this problem requires a multi-pronged solution. And so we are uniquely placed to create a framework that can bring in insurance instruments. And we, of course, support CRIF SPC, and you'll hear more about that in a minute, I'm sure, from Isaac. But also long-term adaptation investments. Also the ability to mobilize concessional resources to reach the people of the Caribbean. Because in all our conversations, I want us to anchor our focus into where these funds need to go, into where this relief needs to go, and that is to the people. So at the multilateral level, we are able to create a framework that can link sovereign risk management to the community level, to the sectoral level, and even to the household level in terms of adaptation, whether it is in your homes or the infrastructure surrounding you, while at the same time supporting the development of new and exciting in parametric insurance premium that move away from a sovereign focus to a sectoral focus. And I don't want to steal Isaac's thunder, but CDB and CRIF are working together to create something fascinating in that space. So we see ourselves really as providing an overarching, almost, if you will, one-size approach to all of it. And for some, the solution may be the blended insurance instruments. For some, it will be long-term adaptation investments, because unfortunately, much of the infrastructure in the Caribbean was built, one, during colonial times, and two, for a climate reality that no longer exists. So adapting our infrastructure to meet this current state is important, but we can't do it with high debt. We can't do it by increasing the debt overhang of countries. And so we need to be innovative in creating concessional financing that doesn't put a burden on our countries, that is thereby passed on to the people of the region. I'll stop there for now. Thank you.
You hit so many important realities, and we heard that also from you, Minister. Countries have debt. They need to keep the lights on. They need to keep kids in school and make sure the medical system still works, all while a hurricane is ripping through the region. You mentioned layered financial risk management. And Isaac, turning to you, of course, you've worked a lot in partnership with multilateral development banks, with countries, with the private insurance sector. Could you give us a sense of what a regional risk insurance platform like CRIF does to help reduce risk, aggregate risk? Just tell us, what role do these regional platforms play?
Thank you for the question, Coco. And again, it's really good seeing you after so many years, and to really thank you for some of your pioneering work, I think, in this whole area of disaster risk insurance and climate finance. But indeed, so just to give a bit of context, I know Daniel has already done some of it in terms of highlighting, the vulnerability of the region, and the fact that the Caribbean, in some ways, is considered to be a hotbed for natural disasters. And that is not to dissuade anybody from visiting the beautiful islands of the Caribbean, but just to also make the point that, CRIF was really inspired because of a major hurricane event called Hurricane Ivan in the year 2004. It really served as a wake-up call for the governments, which led the heads of governments. I mean, we're talking about prime ministers who woke up following the hurricane and saw the extent of the devastation on Grenada, on the Cayman Islands, and many other islands in the region. I said enough was enough. We need to start pre-financing disaster risk. And so that led to a partnership involving the World Bank, the multilateral development banks, other development partners, to establish what was then known as the Caribbean Catastrophe Risk Insurance Facility. We started off with 16 members, and now it has grown significantly. We also started off by providing quick liquidity through the instrument that everybody now knows a lot about, thanks to CRIF, which is parametric insurance. Before that, very little known was of it. So now, what we're now seeing is that CRIF is now able to pay quickly, and as I said, we've increased our coverage from $500 million when we first started to now $1.57 billion. We've made payouts of as much as, almost $500 million. And last year, following Hurricane Melissa, which impacted the island of Jamaica, we actually saw that CRIF actually made payouts of $92 million within a period of only 2 weeks. underscoring the real value of parametric insurance. But the reality is that those payouts are made to governments, the sovereign governments, who have a myriad of needs to deal with. And the reality is that they may not always be able to deploy some of those resources to individuals and to communities. They might decide to put it on rebuilding a bridge or road, and so these are the tough decisions that governments have to make. And it is in that context now, CRIF, again with the support of the Caribbean Development Bank, is now taking a targeted approach to ensure that we come up with instruments that will target vulnerable groups, vulnerable communities, as we have done in the case of the fishery sector, where we've developed a product called Coast, again, because we have hundreds and maybe thousands of fisherfolk who live in those coastal communities and depend very much on, on the oceans, but they're also vulnerable. So we do now have a product that can actually go towards them. The other point I will make before I end is that we are very excited about this partnership involving the Global Center for Climate Mobility, where we're now looking to launch a community-based microinsurance product in St. Kitts, right, where the government will be the policyholders, but the payouts ultimately will go to the vulnerable groups in the community. So essentially, right now, the sky is the limit in terms of what we can do as an insurance company to provide support for the vulnerable in the community. Thank you.
Boy, that kind of sky's the limit and that optimism, we really need that in these morose times. Thank you so much. And for the audience, you may just be taking it for granted, but what all of our speakers are talking about is a new-ish way of thinking about managing risk in ways that are meaningful for governments. Most governments have a lot of debt. To do what a government has to do, they often have to do that with debt. And for households, all of us know an unexpected job loss or a sick parent or a child, let alone having a storm rip the roof off of your house, or just fill in the blank, whatever extreme weather event you may face in your regions, that can upend a family's life and a community's life. And working together, whether it's a government, the private sector, a development bank, a regional risk insurance facility, and I'm coming to you, Krishnan, you are the cherry on top. Layering these tools can provide some parts of the solution, not one solution. That's why I provided this long editorial remark. It really does give us a sense of how different tools can be put together in a way that can accompany us in a system, not just a one-off, but really how do we build things so that they can shift and change as the climate risks evolve. Now, Christian, your reputation precedes you. You're really well known in the social protection space. And as I mentioned right before, the ultimate focus isn't on money, it's not on insurance, it's not on banks, it's really on people and closing the protection gap. So Christian, from all that you know, can you share some of your experience about weaving together social protection, risk transfer, whether that be microinsurance or other protection tools? What does it look like, and what are you seeing right now?
Thanks, Coco, and I would like to acknowledge the opportunity given to me, in particular, UN Capital Development Fund, by the organizers. I will take a minute to tell about UNCDF because it's probably one of the lesser known UN agencies within the UN development system. But it's the only development finance institution within the UN system outside of IFAD, which is focused on agriculture. So we can work in a broad range of sectors. So that way, we are the financing arm of the UN system, so to say. Most UN agencies are only known for technical assistance. We can provide the financing as well. And this is all about financing. I specialize in insurance, and sometimes I talk anti-insurance because it has to be seen in a context. Nobody in the world wakes up to buy insurance, right? So from that point of view, when you talk about parametric insurance or climate risk insurance in very vulnerable markets where the target populations are not very educated and they don't make decisions on insurance just like that. But when you look at access to finance as a whole and embed it with where insurance is embedded within a broader range of financial services, that gets accepted. I would like to thank the Honorable Minister who spoke about some of the work that we have done in the small island development states, especially in Papua New Guinea, where the project is just about a year and a half old, and it has already triggered a payment where more than 3,000 people who were insured through the Women's Microbank got payouts after an earthquake event, which is more or less like what Isaac mentioned, where a government got payout after an event. Now, what is important is the right ecosystem to be created in these markets. And I'm talking about LDCs and SIDS, which is the focus of UNCDF, and where we try to integrate this as a broader set of interventions. Now, coming particularly to the intervention in Jamaica, we are setting up a guarantee for MSMEs in Jamaica. Up to, I think, $1 million is going to be provided for them to be given concessional financing for loans for them to recover. We have done that in a couple of countries. The Mama Bank example, which he mentioned, is one such example, where under the Blue Economy project, UNCDF has given $1 million as guarantee. Now, you may say that, what is the big difference between what this and the other MDBs are doing, whether it's the Asian Development Bank or the World Bank or somebody else. Now, these are all markets where absorptive capacity is limited. Now, we don't talk about 10 million or 20 million deals. We're talking about 1 million deals because these such banks or such microfinance institution can only absorb limited capital to expand. So we build the market, and after 4 or 5 years, these other MDBs and DFIs can take over. Now, coming to the particular point of including the most vulnerable people, so we've done some pioneering work in Fiji where, along with the government, we identified social welfare recipients who are really at the bottom of the pyramid, and through an intervention which is budget supported, given these households parametric insurance, which is offered by the private sector. And mind you, in these markets, you don't have the big names like Allianz. I wish they were there in these markets. You have to work with local insurers. And for local insurers, de-risking capital is very important because they don't have deep pockets. Their technical deficiencies you can fix through technical assistance program. But how do you fix their financial weaknesses? And that is done through the guarantees that UNCDF brings. And again, like I said, these are not multi-million dollar deals because these markets have to be built one step at a time. And we have seen large amount of success right now. I think about 4,000 social welfare recipients in Fiji are covered. More than 20,000 members of the Women's Microbank are covered because these are embedded services. The bank has given them like a loan. They have given them business advisory services. On top of that, there is parametric insurance for these multi-perils that the Honorable Minister mentioned. And climate mobility decisions linked to insurance are not taken overnight. Now, you don't expect, so why I'm saying that this blend of financial intervention is required for micro businesses and small businesses is that if given the money, as we have heard in the previous panel, the mayor of Montego Bay said, they would like to rebuild much better, and for that you need financing. And financing can be made available through, let's say, development banks, and they need to be de-risked to some extent so that their exposure is not so much because these are all highly risky clients. And if we offer a de-risking capital up to first loss of 25%, then they can lend much more aggressively than what they were doing better. And that way you retain the people in the markets where they can adapt to a new way of living. Thank you. I think I will stop here.
Lovely, Krishnan. And we're going to have a chance to hear from you again as we get into the panel discussion. And then remember, audience, we are coming to you, so you may think of 1 or 2 questions that you want to ask to our panel. Minister and Gunther, I'd love to turn first to you. Minister, I think you mentioned a drought, was it, that you've experienced in recent years? And you also mentioned that the Africa Risk Capacity, which is also a regional insurance platform for the continent, played a role. I wonder if you could tell us a little bit more of that. And then Gunther, before the panel, you were telling me that the private sector insurance really does have a sense of some of the data and some of the patterns that are playing out. I'd love to hear a little bit about that. I don't know if you have kind of an insight on different regions, but to both of you, just questions about just a little more depth about what you're seeing in your areas of expertise.
This is in line with the ARC.
Correct, yeah.
Okay, thank you. In our country, like I said, we're only starting to focus deeply into the climate mobility and everything that needs to happen in terms of us as a government to make sure that we protect our people. But if what we're talking about now as a country is that we need to now try and go a bit deeper to say, besides us as a government, I heard him talk about private insurers, and looking at a country as small as Lesotho, it's almost impossible for private insurance companies to have interest in us as a country. So these are now the challenges that we must now face and say, how do we get ourselves out of this to make sure that we sensitize even the community itself to say it's important that you have your own private insurance, in as much as the country must own up and do its part. So for us as a country, it's one topic that we must now sit down, all different ministries, to say, this is the route that we must take. It's very challenging, but it has to be taken. And maybe try and maybe benchmark with other smaller countries like ourselves to say, how do we tackle such challenges? Thank you.
Right, so who carries the risk if insurance isn't present? Yeah, understand. Gunther, thank you.
Yeah, I would say the discussion that we had in many of the sessions, of course, insurance does have the information and the data and can provide the analytics. And does. It is true that not every big insurer is in every country, this is correct, but in terms of how the insurance sector works, let's say this is of course aggregated even up to the global level. So very big insurers play of course exactly that role. And insurers are indeed very willing to have this discussion in an advice form. Advice in very general terms. Insurers are very interested to discuss what are certain evolving risks that can be avoided. Obviously, because this actually lets insurance markets evolve, kind of mature, and then gives access to more of insurance companies to actually play there. The reason why insurers sometimes are retreating is because they lack actually the market information and certain form of transparency. This is what I meant before, where we can really push the frontier. There was another point, if I may, quickly on, let's say, on blended finance, that leads again a little bit back to the investment part. Insurers are very willing to actually do also the collective action there. So for instance, here in Germany, we have set up a platform that is called Scaled. This is with various governments, the German, the Danish, the UK government, the French, the Canadian, the South African. And therefore, insurers behind this as investors. That platform is there to really, as the name says, scale blended finance with various purposes. Adaptation finance, risk pooling, infrastructure resilience and infrastructure development. So again, I would like to say, yes, it's obvious that insurers have lots of information, lots of analytics. Key is whether insurers also pave the way to make this, let's say, all accessible to various communities. And I'm trying to bring across, there are insurers who really work on this and are very ready to have this discussion.
Oh, thank you. And I actually wanted to ask you, Daniel and Isaac, when you're thinking about a financial protection that includes insurance and other tools, how does financial risk management connect with long-term investment with risk reduction as the risk is evolving. Do you have conversations with clients in the region about, Daniel, you mentioned that a lot of the infrastructure needs to be kind of modernized for the current situation. What do those conversations look like? How do you think about investment and long-term risk reduction?
Yeah, thanks. Should I go? Yeah. All right, so thanks, Coco. One of our prime ministers in the Caribbean made a statement that has stuck with me and I think should guide our conversation. And that is, a region that is not insurable is not investable. Investors are not going to turn their attention to a region that isn't covered by insurance. And the Caribbean depends heavily on investment. So to your question on the conversations we have, first, every penny that from the Caribbean Development Bank that goes to a recipient is screened through a model of climate vulnerability risk. Every project that we do, every capital investment goes through our climate vulnerability risk assessment, CVRA, to determine how climate science may be integrated into this investment. So that's one. The next is we look at the absorptive capacity of our country. So I spoke about blended earlier and the matter of concessionality. Our board approved last year the highest replenishment of our special development fund, our concessional window. And we committed as a bank that 35% of our special development fund, and which is the concessional window, and 40% of the overall bank's corporate portfolio must go towards climate action. The next point I want to make is the matter of, and Krishna spoke to it, the matter of providing guarantees, being innovative with the financing. And so you spoke to that long-term view. But it is difficult to get countries to commit to long-term investment if there isn't appropriate cover. And so we have developed a few innovative products. One, which was launched just a few months ago, our Trade Finance Guarantee Program, where we have partnered with IDB Invest and JP Morgan to provide guarantees to the commercial banking sector, because one of the challenges we have, and coming back to the matter of investment in the region, one of the challenges we have is that we have excess liquidity in our commercial banking sector. So we have a disconnect between excess liquidity in the commercial banking sector and a significant need by the most vulnerable and our entrepreneurs and micro, small, and medium enterprises. So we've stepped into that gap. Coming back to the point you made about closing the gap, we've stepped into that gap to provide a trade finance guarantee to commercial banks to reduce the risk threshold of investing in entrepreneurs involved in intra-regional and international trade. We're also doing a similar thing with respect to utilities and specifically to drive the energy transition. And I can share a bit more. We've heard from the Prime Minister, Sinkis Nevis, but I can share a bit more a little later on with it. And quite an innovative tool we've come up with called a contingent recoverable grant to drive geothermal development in Nevis. But these are the type of things we have to do to support long-term investment with an eye on reducing the overall risk premium to countries. But I hand over to my brother here.
Certainly. So just to say, again, I'm glad you raised the question because CRIF, first and foremost, is an insurance company. But we are not a regular insurance company. And I think it's important to make that point. We definitely do not operate like a regular commercial enterprise. We were really set up for our members. In fact, we call ourselves a development insurer, right? So the same way you have development banks, we have a development insurer.
He's not a typical insurance salesman.
So we are very committed about promoting and enabling development. So it's very similar that we have insurance products, they have financial products as well, but they're also very committed to improving resilience, financial climate resilience, CRIF essentially, and the other risk pools in the world, such as ARC, essentially doing the same. But let me also touch on, and Daniel mentioned the utilities. So we have a great partnership going with the water utilities in the Caribbean, where, again, we created a segregated cell within CRIF to be able to have a program that would help build resilience, not by only providing an insurance product, but also to facilitate making available concessional financing to the water utilities to help them. Because we know how important these things are. You know, they are very, so I'm just highlighting that as one example. And of course, we want to continue to build on that. We also have products for electric utilities, renewable energy. All of these things are very critical. So yes, we are very, very committed, not only to providing risk transfer solutions, as we have been doing, but also supporting broad risk management within our countries.
Yeah, I almost, my arms got kind of chills, not to be over dramatic, but when you mentioned, Daniel, that it's really hard to attract investment without having a tool like insurance, I thought about, wow, this isn't climate change way out in the future. This is the lives, this is the headlines that we see in the news. It's a completely different situation, but how many of us have seen on the news, the ships are not going through the Strait of Hormuz if they don't have insurance. You've got a huge, valuable cargo, and if you don't have coverage, what captain or what person in their own lives is going to make a decision to put something that is so valuable for their livelihoods or for their families at risk without that coverage? I thought that was just such a point that really brings home. And for those of us who think about where people live, whether they're moving or able to stay, this is really the world that we live in, and it's changing. And financial risk transfer tools can be part of helping ministers and governments work with public and private providers of these risk transfer tools to make sure that people can make decisions and make decisions that really matter for their communities. Krishan, I wanted to ask you, what about local level protection? You mentioned it in your last comments, but what's needed to make sure that communities don't get left behind as risk continues to evolve? How do governments, NGOs, the UN, financial providers, what do we need to do to make sure that we're keeping pace with the change?
Yeah, so thanks, Coco. So as I mentioned earlier, there is a huge value in what the risk pools are providing at the sovereign level, because that is the infusion of capital to governments to immediately respond to these natural perils. But when we talk about insurance, it is to cover the residual risk. It is not to take away the value of disaster risk reduction and other forms of prearranged financing for building resilience at the community level. It's also a huge education process. These communities have to be made aware about what are the risk reduction measures they need to take. Just because they have insurance when a cyclone approaches and they get the early warning through SMS, it doesn't mean that they can keep their doors and windows open and not protect their livestock. So that is an education process. And the biggest problem which we have found, and I mean, like I give these numbers just as a thumb rule, 10 to 15% of a country would require state support for premium subsidy. But we want to move away from premium subsidies because the development money is shrinking, and interventions cannot no longer say that, okay, let us do a parametric insurance or let us do some form of insurance with premium subsidies. That's no longer the case anymore. But how do you continue to close the protection gap? And that's where the topic of blended finance comes, and we have done some very good experiments where we have given premium pre-financing concessional loans to either microfinance institutions or development banks or even commercial financial institutions for them to use that capital, and where liquidity is in excess and risk taking is a problem, we come up with portfolio guarantees. First loss guarantees up to 25%, so that that institution can give premium pre-financing loans embedded with the overall credit that they give, without distorting the market. That's the fundamental thing we do. So it's a combination of a good education process for the communities, involving the community. No product design will succeed unless it is co-created with the community, and more importantly, there is an element of education embedded within the final last mile sort of reach. And these hard to reach markets, we use a lot of digital interventions. We've done a lot of fintech, insurtech innovations. So it's a whole of ecosystem approach involving the government and the regulator right from the beginning, as well as the private sector, to make this happen. Thank you.
Yeah, lovely. And want to thank the panel so much. And now turning to the audience, some of you, as you've been listening, you probably have a couple of questions, and would especially welcome questions that relate to our theme of maintaining insurability and protecting vulnerable communities and vulnerable households. Welcome a few questions. We now have about 15 minutes. And maybe I will just, if you don't, should I? A mic is coming. Yeah, we have a cluster of questions here, and then we'll go over to this side of the room. So we'll take 2 clusters.
Hello, I'm Sam Risley with the Mayor's Migration Council. I want to ask a little bit about the recipients of these products. I think a lot of useful information on the products itself, with the underlying assumption that this is all requiring sovereign guarantees or countries to come in, sovereignties to come in as the either policyholder or the ultimate recipient. Obviously, from my perspective, we work on city governments as the local actor, and as somebody who works in this space, there's a lack of sovereign guarantees that cities have. There's a lack of credit worthiness that cities have. They're coming with projects that I'm being told by banks that are too small, or not bankable or not financeable. So kind of, Coco, I'm trying to get to your question about like cities as one actor that's closer to those vulnerable communities, not being viewed as financeable, or the onus on that financing is being passed on from the banks to the countries, and then saying, well, the countries can hold that responsibility for passing that financing down. How can we reduce some of those barriers, actually kind of getting to the mayor's question before, so that some of that financing can actually reach local actors such as, in my case, city governments?
Yeah, wonderful. And just for the panel, there were a few hands over on this side. Could we take that cluster of questions together? Thanks. And then we'll go to you as a panel. And for all of you over there, we're coming to you next.
Thank you very much. Good morning. My name is Orlando Habit. I'm from Belize. I'm the Minister of Sustainable Development, Climate Change, and Solid Waste Management. Just maybe more of a comment in regards to the parametric insurance. The setting of the parametrics, of the parameters, has to be well thought out, because you won't put in, for example, a hurricane, but you might put in wind speed. Or you might, on the Richter scale for an earthquake, maybe not a 4, but maybe a 6 and above. So these things have to be well thought out. And then to attract the parametric insurance, especially for the private sector, it can't be anything generic. For example, if I live 60, 70 miles away from the coast, I can't be insured for tsunami, so you can't charge me for that. So things like that have to be considered, so they have to be sort of narrowed down to the particular situation, the particular area. I was glad that a couple of the panelists, and I note Mr. Best mentioned the issue of risk reduction also, and that one area and one way of doing it is for putting proper adaptation measures. And I think, for example, housing. For Belize, I was 3 years ago also the minister responsible for disaster risk management. And we got some assistance through CCRIF, and I applaud those efforts. But I can recall there was a hurricane coming in, and in Belize City, which is a coastal area, very low. We had to make the decision to evacuate some of the more susceptible people and vulnerable people into hurricane shelters. Well, I don't know if you realize it, but maybe in the Caribbean and maybe a lot of other countries, we don't have sufficient dedicated housing shelters for hurricane. So the Minister of Education told me, Minister, he said, please don't open up the schools for hurricane shelters because the children have just got into school after COVID. I said, Minister, what you don't realize is that 90% of our hurricane shelters are schools. And some of those schools may not be in proper condition. But I'm glad that through the Caribbean Development Bank, we're getting these soft loans for the construction of new schools. And one of the adaptation measures there is not only the construction of new schools, but they have to be hurricane shelter standards so that then you kill two birds with one stone. Thank you.
Minister, thank you so much. So we have cities, a ministerial view that the COVID hurricane and school shelters, so that's a really visceral example. Just checking. Okay, let's turn to the panel. Reflections?
Well, I'm not taking the one on the instruments. I let Isaac take that one. But in terms of the guarantees and how do we, I suppose, make these projects, more investable? And that's a great question. And it comes down to being innovative, right? We have to come up with innovative products right now. I think we all know that order is contracting. There's a move away from development financing. So I mentioned tangentially earlier the project we're doing in Nevis, and I could speak a little bit more about that because I think it speaks to where we have to go in our thinking as financiers. We designed a tool called a contingent recoverable grant, where the resource in Nevis, we're pretty sure it is there, but it still has to be proven. We still have to drill for it, and it has to be proven. Now, commercial financiers are not going to do that work. After it's proven, absolutely, they're going to provide you with the financing to develop the plant, generate the energy, and transmit it. But they're not going to provide you with the financing to prove the resource. We designed the contingent recoverable grant as such. 1 million is entirely grant resources. The other 16 million is a $17 million financing product. The other 16 million to St. Kitts and Nevis is contingent. If the resource is not proven, it remains a grant. If the resource is proven, then from the sale of the energy ultimately generated, the government can repay the Caribbean Development Bank. In other words, the government gets to prove the resource, generate it, and transmit energy without adversely impacting the debt overhang. This is where we are going in terms of coming up with innovative products without saddling a country too heavily in terms of a guarantee, sovereign guarantees. But I just want to close on one other point, and Christian touched on it, and that's the importance of MDBs also needing coverage because we have our own masters, the credit risk agencies. So, with official development agency funding shrinking, then we also are at risk in terms of how much we can do. And I don't know if there are any Canadians in here, but I want to certainly, there you go. I want to certainly use this opportunity to thank again Prime Minister Carney and the Government of Canada because for the first time in the history of the Caribbean Development Bank, at our June annual meeting last year, our board approved a $200 million portfolio credit guarantee from the Government of Canada to the Caribbean Development Bank, which will create between $300 and $400 million in financing headroom. So we can do more while our risk is reduced to provide financing to countries without so much of the burden of the guarantees that the speaker spoke to. So thank you.
Yeah. So earlier on, I said the sky is the limit. So I just want to assure my friend Daniel that we can work together to provide him a product, okay?
Yeah, absolutely. Absolutely.
But, Minister, I'm so happy you asked that question. It's really a fundamental point. in terms of the triggers and so on. Because, you know, it really hits home to, I think, what I consider to be one of the big strengths of CRIF, and that is we develop risk models that meets the specific needs of our member countries. Before, we depended on third-party providers, but we took a strategic decision to developing models, as I said, for each country, for individually, that looks at the detailed risk profile of every country. Even in the case of, and just to give you an example, I mean, you know, the product it provides for covering different types of exposure. It looks at, for example, the material, the actual vulnerability, and so on. And I'm really pleased to say that this has held up very, very well, and is one of the reasons why it has been able to provide payouts with such accuracy. There will always be what we call basis risk in insurance, parametric insurance, because we basically using a model. And because we use a risk model, there will always be a difference between the loss on the ground and what the model says. But the critical thing is to try to close that gap. And we have been able to actually do that. And the other thing is that because we own the models, we are learning as well from the experiences of our countries, including Belize. And I will tell you, you may not know that, but your team in Belize really keep us on our toes. And it has really inspired some of the improvements that we have introduced. For example, we introduced a product, and climate-related, called the wet season trigger, largely because of some of what we notice in Belize, some of what we see in other countries. And just to put it in context, we had a situation with Hurricane Beryl 2 years ago, which impacted Jamaica. That hurricane event did not make a direct hit on Jamaica. It was well south, but the reality, because of its proximity, there was significant coastal impact. And because of the coverage that that country had purchased from CRIF, they were able to get a total of $26.6 million within a period of 2 weeks. So it's a very important point, but just to let you know that this is an aspect that we are paying a lot of attention to.
Yeah, wonderful. You know, I am looking at the time. And for you as an audience, the good news is that lunch is just in a few moments. So even though I promised this side of the room a chance to ask a question, I'm going to modify my plan just a little bit. Is there a burning question? And if not, I'd encourage all of you to really fix your question, write it on a sticky note or whatever, and usually use the lunchtime period to keep talking with one another, to engage with our amazing panel. You've just been incredible, so that you keep the conversation going. What I would like to do in our last, really just a couple of minutes, is to ask our panel, if you think about the next 2 or 3 years, what would you like to do, or what would you like to see from your perspective, whether it's government, private sector, all the way out to you, Christian, as a UN agency? What would you like to see in terms of preserving the insurability of a place, preserving the ability to manage those risks as they evolve? Minister?
Thank you. I think for us as a government is to make sure that we have a very clear roadmap that specifies what needs to happen from now, from this conversation going forward. I think for me that's very important. That's where we want to start.
Lovely. Thank you. Günther?
Yeah, well, first of all, thank you indeed for this panel. In the next 3 years, well, if you just check us out, as I said, let's say our scaled platform that may actually help a lot to answer this discussion about how can we really scale planet finance. Our Net Zero Asset Owner Alliance, just look into it, just Google it and check what we are doing. Perhaps there actually may be much more links that have been identified so far. And I would be super happy if over the next 3 years we would have some discussions how this private sector gets into these discussions much more that we had today.
Daniel?
Sure, thank you. One word, scale. I like to see scaled, layered financial protection systems, adequate, affordable, and accessible financing to reaching the people who need it most. And for all the people in the audience that I see fanning, imagine doing that with a beach and a beverage and some good soca music. Visit us in the Caribbean. Thank you.
So Daniel actually stole my word, scale. But since he has already taken that word, all I want to say is that we really have to build on the partnership that has made this whole initiative successful. And partnership involving the governments, the development partners, the donors, they're really supported, but you have to continue to support. And the reinsurance community, we cannot forget them, because much of the risk that we receive from member countries has to be, we don't have enough capital return all of it, we have to transfer it. So just to be clear, reinsurers are not bad guys. They play a very, very important role in this whole ecosystem. Thank you.
Krishan?
Yeah, thanks. So, we in fact have a full session on insurability during the London Climate Action Week with CCAP and WFP. So I don't want to, those of you who are coming, I would encourage you to come for that session. So what I would like to say from UNCDF's point of view is that what we have discovered recently and as part of a refit is that there is a lot of domestic resource to be mobilized, but it has to be blended with donor resources and appropriate sort of instruments like what our friend from the CDB said is very important to be deployed at the local level. So we are there to build markets and then allow MDBs to come in and take on the bigger risks. Thank you.
Wonderful, Krishan. And for those of you, you mentioned London Climate Week. I think for me, one of the things that I take away is it really is a challenging time, but also how inspiring so many of you in the room are running with the change and charting out the future. There's some milestones coming up. Renate Bleich, who some of you know, she's the chairman of the Munich Re Foundation, mentioned to me before the session. There's a conversation like this after the London Climate Week in Kigali on inclusive insurance. This is the International Conference on Inclusive Insurance in October in Kigali. But take your pick. There are conversations and really active work going on. You are wonderful panelists, are leaders in this field you're building. And just to acknowledge the expertise and commitment of all of you in the audience, there's a lot of work to do. Many of you are making that work happen. And so with that, I would like to thank GCCM. Thank you for the chance to have this conversation and just welcome you all now to lunch and continued good conversations. Thank you.
Thank you.